Good morning, friends. Today we are going to talk about a topic on incomes which are exempt from tax under Section 10 of Income Tax Act 1961. This is Professor S. Ramesh Kumar Mehta from JSPM's Rajarshi Sahu College of Engineering MBA department. So let's look the items which fall under the category of incomes which are exempt from tax. So what I mean to say when I'm talking about which are incomes which are exempt from tax, these incomes are fully exempted from tax or partially exempted from tax. So this list of items can be the ones which are fully exempted from tax, or either they can be partially exempted from tax. And we will look at a comprehensive list of items which fall under this category under Section 10 of Income Tax Act 1961. Okay, the first income which is exempt from tax is in agriculture income, and agriculture income falls under Section 10 subsection 1, and we are having a separate uh, topic under which we are going to talk about different types of agriculture incomes which are uh, totally exempted from tax. So this is the first item which falls under the category of incomes which are exempted from tax under Section 10. This is number one. Number two item: payments received from the family income by a member of a Hindu undivided family. Payments received from a family income by a member of a Hindu undivided family. For example, there is a Hindu undivided family. Okay, and the income for the financial year 2019-20 is rupees some 50 lakh rupees. Okay, and Mr. X is there, who is a member of the Hindu undivided family. Okay, now after paying tax on this 50 lakh rupees and assuming that the remaining amount is some 36 lakh rupees, out of this 36 lakh rupees, 3 or 4 lakhs is given uh, to Mr. X, who is a member of the Hindu undivided family. So this kind of incomes or payments received by the member of a Hindu undivided family from the income of the Hindu undivided family, it is fully exempted from tax. The simple reason is already this on this income which is distributed among the family members of the Hindu undivided family, already they have paid the tax on this 50 lakh rupees. So it can't be a case of double taxation. That's the reason this amount which is distributed among the family members or members of the Hindu divided family is fully exempted from tax. So this is number two item. Number three item is share of profit from a firm. Share of a profit from a firm. Let's look at this example. Why look at this item? Why this is fully exempted from tax? So ABC is a firm where A, B, and C are the partners, and during financial year 2019-20, this particular firm made a profit of 30 lakh rupees. This is the profit. On profit, assuming that there is a tax of 30%, so 9 lakh rupees is the tax to the income tax department. So the profit after tax of this ABC firm is 21 lakh rupees. Now this 21 lakh rupees is divided among the partners in assuming on equal equal ratio 7 lakh 7 lakh rupees, that is the share of profit. So already this 7 lakh rupees which is received by the partners of the firm, already they have paid tax on 30 lakh rupees, and hence because of this share of profit members of a firm, So this is the pitfalls which are tax under section 10, particular under section 10 subsection 2A. In the same way, let's look at the fourth item, incomes which are exempt from tax. Interest received by a non-resident from a prescribed security. If there is a prescribed security and this non-resident has invested some amount in this particular prescribed instrument or security, then even whatever interest is earning is fully exempted from tax. This is the fourth item. Interest received by a person who is a resident outside India on amounts created in the non-resident external account. Okay, so interest received by a person who is a resident outside India on amounts created in the non-resident external account. So this is exempt from tax under subsection section 10 and subsection 4. Next one. So this are the five items which fall under the category of incomes which are exempt from tax. Let's see some more and understand them. The next item is leave travel concession provided by the employer to his Indian citizen employee. So this kind of benefit which is provided by the employer to the employee, which is a leave travel concession, leave travel allowance or leave travel concession benefit. So it is an amount paid by the employer to the employee for traveling alone or with the family within India, valid only for domestic travel and tax saving tool as per section 10 5 of subsection 5 of Income Tax Act. So for example, Mr. X is working in Infosys and he has worked for almost 10 years and he is on leave travel and he along with members go to he is working in Pune and he goes to Simla. So and all the expenses for traveling and lodging and boarding are borne by the company or reimbursed by the company. So this is called as leave travel allowance. It is an amount paid by the employer to the employee for traveling alone or with the family. Number one. Number two, it is valid only for domestic travels and it is a tax saving tool as per section 10(5) of Income Tax Act. So let's look some further understanding of leave travel concession. Travel concession falls under section 10(5), received by or due to an employee for himself or for his family, and this family and himself in connection with his proceeding on a leave or retirement or termination to any place in India. Means he's taken a vacation and he along his spouse and family members are proceeding on leave or on retirement or termination to any place of India is exempt from tax subject to some conditions. So certain conditions are there and some limits are there. If the amounts reimbursed are paid by the employer or within that limit, and it is fully exempted. Whereas if it crosses that amount, then over and above is fully chargeable. Let's look at the provisions. Provided that the amount exempted under this clause shall in no case exceed the amount of expenses actually incurred for such travel. So let's look some provisions. Okay, the provisions are where the journey is carried out or performed by means of air, that is air travel, where the journey is not performed by air and both the places are connected by rail. Number two. Number three condition is where the journey is neither performed by rail nor by air and nor are the places connected by rail and air. So so the first case is, for example, the person who is the employee who is working in Infosys has taken a leave travel concession, and he is moving from Bangalore to Kashmir, and he along with his family members are going to Kashmir for a vacation and by a direct flight from Bangalore to Kashmir. So that is the meaning of it. So if all these expenses of traveling are reimbursed by the employer for towards a leave travel concession, and where the journey is performed by air, exemption allowed, exemption of amount which is allowed is economic class fare of the airlines. For this case, for example, economic class fare is some 10,000 rupees per member, and four members are going. So 40,000 to and 40,000 fro. So total amount is 80,000 rupees. So if the total amount of 80,000 is reimbursed by the employer, nothing is taxable, because when you are performing the journey by air, the maximum amount which is exempted is economic class fare of the airline. In this case, the economic class fare of the airlines is 10,000 rupees. For four members, it is 40,000 rupees. For two and four, it is 80,000 rupees. So this 80,000, if it is reimbursed, nothing is taxable. But however, if it is reimbursed to the tune of, for example, 1 lakh rupees. So out of this 1 lakh rupees, 80,000 is exempted and 20,000 is fully taxable. So a part is fully taxable and a part is exempted, or sometimes the full amount, it is if it is within the limits as per the provisions of LTC LTC, then nothing is taxable. It is fully exempted. So so where the journey is performed by air, then the rule says that the exemption amount is economic class fare of the airlines. Now, when the journey is not performed by air and both the places are connected by rail, for example, this guy is going for LTC, leave travel concession, and he is leaving to a place for vacation along with his family from Bangalore to, for example, he goes to Goa, and these two places are connected, well connected by rail, and he is performing this journey along with family members who are eligible for getting exemption of leave travel allowance by rail, which are well connected. So in this case, to and fro can be exempted, but the exemption limit is air conditioned first class railway fare. First class AC, first class AC of the railway fare charges are the maximum amount which can be reimbursed by the employer for to and fro journey performed by rail, which in which the two places are well connected by rail lines. So in this case, for example, if four members of the employee are going from Bangalore to Goa for a vacation, so and the fare, first class AC fare of this journey is 1,500 rupees. So 6,000 is two, and fro is another 6,000. Total amount is 12,000, which is the one which can be reimbursed by the employer, to which it is fully up to which it is fully taxable. Over and above, if it is reimbursed, it is fully taxable. So I have given a little understanding about leave travel concession, which is fully exempted as per the provisions of Income Tax Act up to a certain level, and over and above, it is fully taxable. Now, another set of incomes which are exempt from tax under section 10 are like this. Remuneration received by foreign deployment of all categories. For example, foreign embassies, employees who are working in foreign embassies. For example, in employee is working in American embassy in India and is getting a salary of some 50 lakh rupees from America. So as he is working is a working foreign diplomat, then any remuneration received by these foreign diplomats in India is fully exempted from tax under section 10C, subsection C. In the same way, salary received by a foreign citizen as an employee of a foreign enterprise, provided his stay in India does not exceed 90 days. So if a employee is there, he is receiving salary. Salary is received by a foreign citizen as an employee of a foreign enterprise, provided he stays in India less than 90 days during the financial year or the previous year. Then the salary received by such foreign citizen from such foreign enterprise is fully exempted from tax. So this is another item which falls under the category of incomes which are exempt from tax under section 10. In the same way, salary received by a non-resident foreign citizen as a member of a ship's crew, provided his total stay in India does not exceed 90 days. For example, there is a ship from Dubai and it comes to and the ship comes to India, and the captain stays in India because of this reason of his employment, the nature of the employment for the whole year for 60 days, and he is receiving salary from this Dubai employer. Then, as the number of days of stay in India is less than 90 days, and he is a non-resident of India, so this salary received by him is fully exempted as tax, and he is also a member of a ship's crew. So a ship's crew, and he is a non-resident of India, and his total stay in India is not more than 90 days. Then the salary is received by a non-resident foreign citizen as a member of ship's crew. In such a case, where his total number of days stay in India is less than 90 days, is fully exempted from tax. So this is the point. Next point: remuneration received by an employee being a foreign national of a foreign government deputed in India for a training in a government establishment or public sector undertaking. So remuneration received by an employee and he is a foreign national of a foreign government deputed in India for a training purpose in a government establishment or public sector establishment. Then such a remuneration received by this foreign employee who is a foreign national of a foreign government is fully exempted from tax. This is the another item which falls under the category of incomes which are totally exempted from tax under section 10 of Income Tax Act 1961. Tax paid on behalf of foreign companies. If any tax is paid on behalf of foreign companies, it is also fully exempted under tax under section 10 subsection 6A. So some items I require to give a detailed explanation, and some items it's by default we have understood, I assume. Next one: tax paid by government or any or an Indian concern in case of a non-resident foreign company. So if tax is paid by the government or a Indian concern in case of a non-resident or a foreign company, it is fully exempted from tax. In the same way, income arising to notified foreign companies from services provided in or outside India in project connected with security of India. Okay, if any project is connected with the security of India, in such a case, under section 6C, section 10 6C is fully exempted from tax. So income arising to a notified foreign companies from services provided in or outside India, and this project is related with the security of India. So any such income to a foreign company for this kind of services is fully exempted from tax. Foreign allowance granted by the government of India to its employees posted abroad. So if any employee who is posted abroad by the government of India is giving foreign allowance or granting some foreign allowance, Such foreign allowance granted by the government of India to its employees who are posted abroad and keeping in view the nature of the work carried out under section 10 of and subsection 7 of Income Tax Act 1961, it is fully exempted from tax. So let's look at the next point. Remuneration received from a foreign government by an individual who is in India in connection with a sponsored cooperative technical assistance program with a foreign government and the income of the family member of such employee. So let's look at the details of this particular item which is exempted from tax. Remuneration received from a foreign government by an individual who is in India in connection with a sponsored cooperative technical assistance program with a foreign government and the family member income of the family members of such employee is fully exempted from tax. Next one. Next one is uh, gratuity received by the employer from the by the employee from the employer at the time of retirement is exempted from tax. But there are some ceilings and limits to which they are exempted from tax. Let's look at these provisions under gratuity as a retirement benefit received by the employer or by the employee from the employer under section 10 subsection 10. So treatment of gratuity for government employee, it is fully exempted from tax. Any government employee is receiving retirement at the time of retirement or during at the time of his death. If the family members are receiving gratuity of the deceased employee, then whatever gratuity is received, if the is a government employee, it is fully exempted from tax. So please remember at the time when we discussed about income from salary and under retirement benefits, I spoke comprehensively about gratuity, pension, leave encashment, and I told the maximum amount which is exempted from tax, the rules and regulations, and other stuff. But still, we will cover a part of the discussion, whatever we have discussed in the earlier here in when we are discussing about income which are exempt from tax under section 1010. So if an government employee is receiving gratuity at the time of retirement, then it is fully exempted from tax. For example, Mr. X is working in State Bank of India or BHEL and is retiring after putting up a service of 50 years and is receiving a lump sum of 50 lakh rupees as gratuity from the central government. It is fully exempted from tax. This 50 lakh rupees is fully exempted from tax. But what about private employees? So treatment of gratuity received by the private employees will fall under two categories. One is employee who is covered under Gratuity Act and employee who is not covered under Gratuity Act. And let's look at the provisions. So this point already I have discussed that if an employee receives gratuity at the time of retirement from central government or state government or local authority is fully exempted from tax. But in case of a private employee and the employee is covered under Payment of Gratuity Act 1961, then the least of the following is exempted from tax. So all these were discussed when we comprehensively discussed about income from salary or salary income, and when we spoke about the different types of retirement benefits uh, by the employee. So in this case, when the employee who is receiving gratuity under Gratuity Act, under the Payment of Gratuity Act, then the least of the following is exempted from tax. So some part of the amount is of the total amount is exempted from tax. So actual amount received or rupees 10 lakhs or half month salary for every completed year of service. The same way, if it's not covered under Payment of Gratuity Act, actual received or 10 lakh rupees or half month salary for every completed year of service. But the only difference is Here it is the Hoffman salary is calculated on the basis of 15 by 26, and here the Hoffman salary is calculated on the basis of 15 by 30. Number one. Here salary means basic salary plus DA and last drawn salary to be taken. Whereas in case of this one, salary means basic salary plus DA plus commission as a percentage of the turnover, and salary is average of the last 10 months salary. So there is a difference between employee who is covered under Payment of Gratuity Act and employee who is not covered under Payment of Gratuity Act. So a part of this is fully a part of the gratuity is exempted from tax. So this is an item which is exempt from tax under section 10. So another a bit of information in this slide. Next one is pension. So pension are of two types. One is lump sum payment of pension and one is periodical payment of pension. And lump sum payment of pension, which is called as commuted pension, is fully exempted in the hands of the government employee. And whereas in case of a private employee with some conditions, they are exempted. So under section 10, commuted pension is exempted from tax partially in case of private employees, and in case of government employees, if any computed pension is received at the time of retirement, which is a lump sum payment of pension, it is fully exempted from tax. Uncommuted pension is fully taxable under the head income from salary. Next one. Next one is leave encashment. So all these items what I am discussing are exempted partially or fully from tax. And the next item is leave encashment or leave salary. So this also we have discussed comprehensively and by and large when we spoke about income from salary and retirement, and in particular retirement benefits. So if leave is encashed during the service, it is fully taxable, whether he is a private employee or a government employee. In case leave is encashed at the time of retirement, and in case of a government employee, it is fully exempted from tax. Whereas leave encashment, if it is encashed at the time of retirement, in case of a private employee, there are some conditions, and based upon these conditions, a lump sum payment of money is exempted from tax. Next one, retrenchment compensation. So retrenchment compensation is exempted from tax under section 10. Let's look at some of the rules, regulations, and provisions of retrenchment compensation. So this retrenchment compensation received by a worker under the Industrial Dispute Act 1947, then in such a case the following of the three is exempted from tax. The least of the following of the three is exempted from tax. So amount received, for example, he has received some 6 lakh rupees as a retrenchment compensation. Number one. Number two, 5 lakh rupees as specified by the government of India or by the central government. Number two, half month salary for every completed year of service in excess of 6 months. So, for example, he has worked for 29 years and 5 months. So, we'll get half month salary for every completed year of service, ignoring if it is less than 6 months, ignore it. If it is more than 6 months, like 6 months or 6 months, 1 day, it is fully converted to 1 year. So, he will get 30 months salary. So, 15 into 26 is half month salary for the purpose of calculation of retrenchment compensation. So, it is exempted from tax. Next one. So the some more information of Retrenchment Compensation Act. Retrenchment compensation, which is exempt from tax under Income Tax Act 1961 under section 1010B. Next one. Compensation received by the victims of Bhopal gas leak disaster. If any compensation is received by the victims who suffered the wrath of Bhopal gas leak disaster from the central government of India, all such amounts, whatever is received, by the victim of this Bhopal gas leak tragedy, that amount is fully exempted from tax under Section 10, subsection 10BB of Income Tax Act 1961. Next one, compensation from the central government or state government or local authority received by an individual or his legal heir on account of any disaster is fully exempted from tax under Section 10, subsection 10BC. If any disaster has taken place or a mishap has taken place or accident has taken place and a compensation is paid to the individual or his legal heirs, then if the amount is received from central government or state government or local authority, any such amount, whatever is received as compensation by the individual or his legal heir on account of this kind of a disaster or mishap or accident is fully exempted from tax. For example, accident has taken place and the individual has died, succumbed to the accident, and because of this, the compensation is received by the legal heads from the central government or state government or local authority. This 5 lakh rupees is fully exempted in the hands of the legal heads. Next one, compensation received from a public sector company at the time of voluntary retirement or separation also is fully exempted from tax, subject to some certain terms and conditions. So if an employee has opted voluntary retirement and he has got some lump sum payment as a compensation from the public sector company, for example 10 lakh rupees, so subject to certain conditions and exemptions, this amount is exempted from tax under section 1010C. Next one, tax on perquisites paid by the employer are exempted from a tax under section 1010C. For example, free medical facility. Free medical facility is provided by the employer to the employee to the employee is fully exempted from tax. Free refreshments during working hours. If tea, snacks, beverages, apart from alcoholic beverages, is provided by the employer to the employee during the working hours, this is a perquisite which is exempted for all kind of employees. Free recreational facilities provided by the employer to the employee is exempted from tax. In the same way, free meals provided by the employer to the employee and this employee and the employment is taking place in a remote area or at an offshore installation, then whatever free meals are provided by the employer to the employee in this kind of remote area or at an offshore installation, this is not an income and this is fully exempted from tax. In the same way, free education, training or refresh courses provided by the employer to the employee is fully exempted from tax. So free education provided by the or training programs or seminars or workshops provided by the employer or to the employee for enrichment of knowledge or enhancement of knowledge of the employee, which is used for the employment, is fully exempted from tax. In the similar fashion, leave travel concession we have already spoke. Free ration received by the members of the armed forces is fully exempted from tax. So these are some of the perquisites which are exempted from tax under section 10C of Income Tax Act 1961. Next one, let's look at some more perquisites which are fully exempted from tax or partially exempted from tax. For example, free medical facility or reimbursement of medical expenditure is exempted up to rupees 15,000 per annum. For example, Mr. X is there and he is admitted to a hospital, private hospital, and the medical bill was 7,000 rupees, and this bill was reimbursed by the employer, and this is within the limits of that ceiling amount of 15,000 rupees per annum. So this amount is fully exempted from tax. So this I spoke about this provision for telephone, including mobile phones. If telephone is provided by the employer to the employee. Provision for such a telephone or mobile phone provided by the employer to the employee is fully exempted from tax. In the same way, free education provided by the employer to the employee in the schools or colleges belonging to the employer up to 1,000 rupees per month per child up to a number of children is fully exempted from tax. So goods sold by the employer to the employee at a concessional price is exempted from tax. So these are some of the perquisites which are partially or fully exempted from tax. In the same way, rent free accommodation provided by the government to officers of parliament is fully exempted from tax. Next, in the same way, let's look at some more items which fall under the list of items under Income Tax Act which are exempt from income. Any sum including bonus on a life insurance policy not being a key insurance policy. Any sum including bonus on life insurance policy not being a key insurance policy is fully exempt under tax from tax under section 10 subsection 10d. Any amount from provident fund paid to returning employee. If any amount is paid from the provident fund to the employee who is returning is exempted from tax under section 10 subsection 11. In the same way, any amount from an approved superannuation fund to the legal heads of the employee is fully exempted in the hands of legal heads of the employee. Amount from an approved superannuation fund which is paid to the legal heads of the employee will be exempted totally from tax under section 10 subsection 13 of Income Tax Act 1961. Next one is house rent allowance. So we spoke about the rules and regulations of house rent allowance, the taxability, the conditions, and it is exempted from tax under section 10 subsection 13a. In the same way, special allowances provided by the employer to the employee is exempted from tax under section 10 subsection 14. So let's talk about HRA. How much is taxable and how much is exempted, or how much of the amount is exempted from the tax under section 10 subsection 13a. So the least of the following is exempted from the tax. So we have done so many problems as far as HRA is concerned under the head income from salary. So the least of the following is exempted from tax. So actual HRA received by the employee from the employer is the first item you have to find out. Number two is rent paid by the employee minus 10% of salary. And third is 15%, 50% of salary in case of metropolitan cities, and 40% of salary in case of non-metropolitan cities or cities other than metropolitan cities. And salary for the purpose of calculation of HRA is basic salary plus DA if DA is forming a part of retirement benefits plus commission received on fixed amount of turnover achieved by the employee. So after you calculate all these three, whichever is the lowest is exempted from tax. And in the same way, there are some allowances, special allowances, which are uh, exempted from tax. Let's talk about those special allowances. So HRA we have seen. We are going to talk about entertainment allowance for government or employees subsequently. And now let's talk about special allowances which fall under the category of section 10 subsection 14.1. So there are six special allowances: helper allowance, uniform allowance, academic allowance, or this is also called as research allowance. This is also called as research allowance, conveyance allowance, traveling allowance, and daily allowance. Traveling allowance is called as transfer allowance. So these are all special allowances. I had a separate topic and a separate video on special allowances. When we spoke about income from salary, at that time we have covered all these special allowances. So the rule for special allowances is allowances are this special allowances are exempted to the extent the amount is utilized for the specific purpose for which the allowance is received. For example, helper allowance. So the employer has is paying to the employee some 10,000 rupees per month for helper allowance to the employee towards helper allowance to the employee. Now, out of this 10,000 rupees per month, what he has received as a helper allowance from the employer, he is spending only 7,000 rupees per month. So, he has received 10,000 rupees per month. 10,000, 7,000 rupees is what he has actually spent towards helper allowance. So, 3,000 per month is fully taxable. So, this part which is not taxable is 7,000 rupees, which is what he's spending on helper allowance. So, whatever amount which is spent on this particular allowance is fully exempted from tax. This is the rule to be followed for special allowances. So, special allowances are exempted from tax under section 10, subsection 14. In the same way, entertainment allowance. Let's talk about entertainment allowance. In case of an entertainment allowance received by the private employee, it is fully taxable. Whereas in case of a central government employee, the least of the following is exempted from tax. That is rupees 5,000 for the full year. Number one. Number two is 20% of salary. That is 20% of basic salary and actual amount of entertainment allowance received by the employer by the employee from the employer. So among these one, two, three, whichever is lowest is exempted from tax. Next item under section 10 is interest from certain exempted securities. If certain exempted securities are there and the assessee has invested in these exempted securities and if any interest is earned by this assessee, it is fully exempted from tax under section 10 subsection 15. Scholarship granted to meet the cost of education. If government is sanctioning or granting scholarship to meet the cost of educational expenditure under section 10 subsection 16, it is fully exempted from tax. In the same way, payment made by an Indian company engaged in the business of operation of an aircraft to acquire an aircraft on lease from a foreign government or foreign enterprise is fully exempted from tax. So, payment made by an Indian company which is engaged in the business of operating operation of aircraft to acquire an aircraft on lease from a foreign government or foreign enterprise fully exempted from tax. Next one, daily allowance of a member of a parliament or a state legislature, entire amount is exempted. Any other allowance subject to certain conditions. So if DA is issued by a MP or a MLA because of his stature, it is fully exempted from tax. Now, next point, next item under incomes which are exempt from tax, rewards given by the central or state government for literary works, scientific work or artistic work or attainment or for service for alleviating the distress of the poor, the weak and the ailing, or for proficiency in sports and games or gallantry awards, which is approved by the government, is fully exempted from tax. So, if any rewards are given for literary work, for example, some 5 lakh rupees is given towards some accomplishment of literary work by Mr. X, who is the assessee. So, any reward by the central government or state government for this kind of literary works or scientific works or artistic works or work which is taken up for alleviating or removing the distress of the poor or for achieving some proficiency in sports and games or gallantry awards is fully exempted from tax under section 10 subsection 17a. Next one is pension and family pension of a gallantry award winner is also exempted from tax under section 10 subsection 18. Next one, family pension received by family members of armed forces. If a family pension is received by family members of armed forces under section 10, subsection 19, it is exempted from tax. Next one, national property income of any one place, it is palace, sorry, occupied by former ruler is fully exempted from tax. Income from local authorities. So income from local authorities is fully exempted from tax. Income from local authorities is fully exempted from tax. Any income of housing boards constituted in India for planning, development, and improvement of cities or towns or villages is also exempted from tax under section 1020A. In the same way, income of specified non-agencies are exempted from tax under section 1020 22B, sorry. Any income of a approved scientific research organization or association is also fully exempted from tax under section 10 subsection 21. In the same way, I will take up some of the important items which fall under the category of incomes which are exempt from tax. Income of funds established for the welfare of the employees. If there is an income of funds established for the welfare of the employees, it is fully exempt from tax under section 10 subsection 23 triple A. Income of IRDA is income of the pension fund set up by LIC or any other insurer which is approved by the controller of IRDA is fully exempted from tax under section 10 subsection 23 AAB. Any income of pension fund set by LIC or any other insurer approved by the controlling authority which is IRDA or any other insurance agency is fully exempted from tax. In the same way, any income of a trust or a society approved by Khadi and Village Industry Commission. If any agency is any trust or a society is approved by Khadi and Village Industries Commission, and there is an income for such kind of trusts or societies, it is fully exempt from tax. In the same way, income of European Economic Community derived in India way of interest, dividend or capital gains is also exempt from tax. Any income arising to anybody or authority established, constituted, or appointed under any enactment for the administration of public religious or charitable trust or endowments or societies for religious or charitable trust are exempted from tax. Next one, income of SARC fund for regional projects set up by Colombo Declaration is also exempted from tax. Income of a mutual fund set up by a public sector or private sector, public sector bank or a public financial institution is also exempted from tax. Subsidy received by planters of rubber, coffee, and cardamom are also exempted from tax. Dividend on or after 2003 from domestic companies. This is very important. From assessment year 2021, 22, 21, 22, dividend is fully taxable. Before that, till 2020-21 assessment year, up to 10 lakh rupees, it is fully any dividend income received by the assessee from a domestic company is exempted up to 10 lakh rupees. Over and above, it is fully taxable. The same way, income on units of mutual funds on or after April 1, 2003 is fully exempted from tax subject to some conditions. So, in the same way, income from specified 100% export oriented undertakings is fully exempted from tax. Income from property held for approved charitable or religious purpose is fully exempt from tax. Incomes of industrial units situated in trade free zones or Specified technology parks is fully exempted from tax. Long-term capital gain in some cases is exempted from tax. So these are some of the incomes which are exempted under tax Income Tax Act 1961 under Section 10. A comprehensive list of this has been discussed, and this is a very important topic. You need to have a thorough understanding of this kind of incomes which are exempted from tax. Hope you have taken a very serious note of the same. Hope you have understood. Thank you so much for joining me and listening to me patiently. Stay home, stay safe, and take care. Bye bye. Good. Have a good day, and see you further in the next class for a different topic on income tax and Act 1961. Thank you so much. Bye bye. See you. Catch you soon.